The European Central Bank is set to announce the first measures to stimulate the economy since it disappointed markets in December by doing less than many had expected. To talk us through what we might expect this week, and more importantly what the market is expecting Mr. Draghi to do, we're joined by Elaine Moore, capital markets correspondent for the FT. Hello, Elaine.
Hi.
So, what might happen this week?
So I think it's going to be a really interesting meeting on Thursday. When I've been speaking to investors, it seems like there is consensus that the ECB is going to do something. So in January, we had the Bank of Japan surprising markets by suddenly going down into negative interest rates. Europe is already there. So investors think that we're going to go even further. So we're going to cut interest rates maybe by another 10 basis points, and that also there's going to be an expansion to the existing QE program. So maybe buying more bonds every month or expanding the date of the bond purchase program by a little bit further. So that is kind of taken for granted. What we don't know is whether there will be more than that and whether there'll be some kind of extra surprise for markets.
Could Draghi have the last laugh? And I think you've got a chart here which sort of provides some of the context.
Yeah. So if we look here, this is the yield on the German 10-year bond. So Germany is the main bond market if we're talking about European bonds. What this shows is that the yield has been coming right down, so it went to a record low, and that would suggest that investors are expecting there to be a huge expansion to the QE program. But if you look, you can see that it's actually even further down than it was in December. So that would suggest that investors are expecting more of a surprise than they got in December. And December, remember, is when the ECB disappointed investors, and there was a huge bounce back up again as the market sold off.
And we've seen this before, haven't we? I mean, you can write here, there was a Bund shock. The ECB was going to do, I think it was the start of their quantitative easing program. And then we got to the point where Bill Gross came out and called Bunds the short of the century. And 2 months later, Bund yields had shot all the way back up again.
Yeah. There are some banks that are saying we could see that happen again. So maybe yields have come down so far. There was, if you remember the start of the year, there was this kind of global doom and gloom, thinking that the global economy was doing so badly, everybody was rushing into the largest bond markets, including Germany. So maybe that's gone so far, and maybe the expectation of what central banks can do, what ammunition they have, has just sort of run out of steam. So we could see the ECB, even if it cuts rates, even if it expands QE, it still might not be enough, and maybe we'll get the same thing we got before, and we could see the yields shoot back up again.
And are there any particular trades which investors are thinking about as they approach it? Because obviously they're a bit wary from last time.
Yeah, there's definite market wariness. So as I've said, we've already got investors going into the core bonds. There's also a suggestion that maybe this could be quite good for banks. So we know that there's some worry about the effect that QE is having on banks in Europe at the moment, and European banks aren't doing brilliantly. So there's a question, could there be tiered interest rates like there is in Japan, and would that therefore be good for the banks in Europe? So some investors are talking about going into bank stocks right now. There's also a question about going into Italian or maybe Spanish bonds, because the idea that the peripheral spread could reduce as QE is increased.
And the ECB might change the mix of bonds it buys in order to benefit the different countries, I think.
Yeah, there's also this idea that maybe there's a bottleneck. So at the moment, the ECB has to buy so many German bonds, there's not actually enough in the market, possibly, for it to continue its program out to as long as it wants to. So there's a question that maybe it will expand the types of bonds it buys, maybe it will start buying corporate debt, maybe it will buy more debt from the southern peripheral countries. So that could be another sort of shock that the market could expect.
Plenty of opportunity to be surprised again. Thank you, Elaine.